Hi, everybody. My name is Chris Cady. I'm here with Kenny Polcari. This is the Misfit Happy Hour. Matt from Sanglucci is joining us. Sanglucci is the sponsor of this. They are the people, including Ranchero and Sanglucci himself and Charlie Bathgate, who run it. They're great friends, and we highly recommend any products that they produce. It is from, obviously with Kenny, high quality information. And so we're talking about today, what we want to talk a little bit about today is the understanding that the name of the game, in other words, how Kenny and I learned to trade, and is completely different now from the way that Matt is learning how to trade.
Or anyone of that generation or younger is going to learn how to trade,
right? Like when Kenny used to walk up to a specialist on the floor of the exchange and say, "What's here?" The only technical analysis we had, was perhaps
the people in the crowd,
right, and or a point and figure chart or something like that. Right. Everything was drawn on it with a pencil,
right? Well, the specialist, gave you the parameters of his market, what he was representing. The buyers and sellers of the crowd would speak up,
right?
But when the buyers and sellers of the crowd spoke up, it wasn't like they all pulled their pants down and told you exactly what they had, because that was part of the negotiation, right? I could have been sitting there with 300,000 shares of IBM to buy, and you would have come into the crowd and said to me, "What's going on IBM?" And I would say to you, "I'm a buyer."
And now, you'd say following along.
Well, I might say a couple of things. I might say I'm a limited buyer, which means I've got a price limit, so I can't pay above $20.
In the ring, we used to go like this. Someone would ask across the ring,
right,
and that we would go, "Can't go any further,"
or can't go any further, right? And so it was a very physical, not physical like fighting physical, but physical in the presence of the people.
The motions. I was going to ask, how would you place a market order in the ring back in the day?
So,
or was there? Did that even exist?
Yeah, you would walk into a crowd with a market order to buy or sell stock, and you'd say to the specialist, "How's the market? What's the market in digital? Or what's the market in IBM?" And the specialist might say to you, "I'm 20 bit off and at a quarter, 5,000 by 20,000. I got 2 sellers and no buyers." Well, I might have 10,000 by at the market, but now that he gave me all that information, that just doesn't mean I'm going to take my 10,000 and go out and take the stock at a quarter. Why would I do that? There's 20,000 off and plus there's 2 sellers and there's no bids. So why wouldn't I stay on the bid side and try to get that right? Even though I have a market order to buy, it doesn't mean I have to get out there and pull my pants down and go, "I'll just pay any price." No, I then am going to work for my client. I'm going to stay on the bid side. I'm going to test the anxiety of the sellers, right? Because there's the book offering 20,000 in a quarter, plus there's 2 other sellers in the crowd. I don't know what they have. They might have 100,000 for sale. I've only got 10,000 to buy. So it's that process of you had to read the crowd, you had to gather the information, you had to understand what the stock was doing, you had to understand what your customer wanted to do. You had to understand if you wanted to be aggressive, even though they had a market order. Market order didn't mean just be aggressive, go out and pay any price. It meant that I had the ability to pay a price that I thought was correct at that moment in time, based on the information I learned in the crowd.
Now, machines, as soon as they know that you've got something, the race is on.
Right. Well, because it's like everything. Everything goes into the machine. So the algorithms read the algorithms. And so they see all the orders coming through the system. When I that's right. When I came into the crowd, my order's here in my hand. Nobody sees it. There's no one to see what I have. And if I walked into the crowd and said, I'm a buyer in digital, a buyer in digital just tells you that I'm on the buy side. I'd be willing to buy stock, but I didn't tell you how much I had. I didn't tell you what price I could pay. I didn't tell you if I was a percentage of the volume buyer. I didn't say anything. Why? Because I'm not letting you pull my pants down until I have a better idea of what else is going on in the crowd. How many other buyers are there? Are there no other buyers and 3 sellers? How much do the sellers have? What are they looking to do? There was so much information you gathered at the point of sale by having a conversation, and that was the excitement of it.
You know what's interesting is we learn that, right?
Yeah, you learn that by doing it, right? And every stock was different. Listen, digital traded very different from IBM traded, very different from American Telephone traded, very different from General Electric.
Which trades different than corn and crude oil.
Exactly right. Exactly
right. So the personality of a particular issue either agreed with you or it didn't agree with you. It's very strange, and that's still present in these markets.
I was gonna say, I noticed that because I'll try to trade certain instruments, and I'm like, hey, for example, I'm terrible at trading Tesla, right? For whatever reason, I cannot figure it out. So I just stopped. I stopped attempting it. I'm like, all right, there's greener pastures out there.
Right.
So it was a
Right.
similar thing, but it's a physical component back
Right,
in
but
the
I
day.
think what's difficult,
Who taught you?
the people in the crowd is who taught me. The
Right, and
teachers were everybody on the floor.
around, right?
There were 5,500 type A personalities in the place. And
Characters.
every one of them was a teacher in a different way,
Right.
right? Some were more important certainly than
And
others.
if your enemies didn't like you, they told you that right to your face.
Yeah, but you know what? But you know what? During the day, you and I could have been, I could have disliked you
right? Like
every minute. I could have disliked you, but during the day, when I was in a crowd, I had a job to do. If you were on the contra side of that trade,
Right.
you and I had to interact.
Right.
Doesn't mean that I had to take you out to dinner afterwards and buy you a beer, not at all.
No.
But you and I had to interact, right? Whether or not I liked you or not, and whether or not I liked you or not, made no difference when it came time to buying or selling a stock. Because if you were the contra side to that trade, I was forced to have to work with you.
Right. It was professional.
Right. It was completely professional.
Right.
But
And there was no gender,
Okay.
no ethics. It was a trade.
it was a trade, and a trade is a trade. You know,
Right.
your word was your bond.
Right.
Once you took them or once you hit the bid, that was it. No going back. Oh, I made a mistake. No.
Right.
You couldn't say go in there and buy 10,000 shares at a quarter and realize there's 300,000 for sale. Go, oh, wait, I didn't mean to do that.
And
You
anytime
already
someone,
did it.
anytime.
Well, I
someone-
was going to say, Chris, like you always talk about professional courtesy in the ring and how that's not really the case anymore, right? With like now the algorithms and how it's like you might not get a chance to get out and you're just getting squeezed,
Well,
squeezed.
because there's no conversation. So how can there be professional courtesy when there's no conversation? There was professional
point.
courtesy
Right.
when there were human beings in the process, but it didn't mean that you could go in and, you know, like gangbusters and buy or sell something and then afterwards realize, oh, I made a mistake, and then try to get out of the trade. Not that kind of professional courtesy. Professional
Okay.
courtesy would be more like when you walked into the crowd, you assessed what's going on, and he might have said to me, I'm a seller, so I might say to him, listen, I'm looking to buy 100,000 shares. Now that I've told you that, give me a little bit more information so now we can create
It was
a trade.
right? It was like
Okay.
you could open your kimono.
Exactly right. You look under the sheets and see if you liked it. But one way or the other, he might say to me, I've only got 20,000 for a sale. Okay, great.
Right.
That's perfect. You've got 20. I got 100 to buy. You've got
Right,
20. So
right.
now I need 80,000 left to buy.
Right,
So
right.
now I'm going to have the conversation with the specialist. I'm going to have a conversation if there's somebody else in the crowd. And maybe there's not 80,000 there for sale. So maybe nothing trades at the moment. Or maybe I buy 10,000 to get started and then I sit back on the 90 and I wait, right? But the professional courtesy,
Element made everybody feel comfortable, and it was a business transaction.
but it was also the way the information was disseminated, right? Because that was the way it was. Today, because it's an algorithm, you have nobody to talk to. So when you go into the algorithm, you don't know if you're buying into a bag or not. You don't know if there's
Right.
a million for sale or not. All you know is that it's trading electronically,
You're
right? When it was a human-based system,
which is not coming back.
no, it's not coming back.
Right.
But listen, if he were a seller and he had 200,000 or 300,000 shares for sale and I had 20,000 to buy, and I said, listen, I got 20 to buy, he might say to me,
Back
Kenny,
away.
stay on the bid side.
And we'll fill you.
Because he obviously knows he's got more for sale. And guess
Right.
what? When he'd say that, he said, the worst you're going to do is pay the offering side, which is where he was.
Right.
But you're probably going to be better off if you relax,
Right.
take a deep breath,
Yeah.
stay on the bid side,
Right.
because
You
he's
got this.
potentially going to hit a bid and
Right.
sell more stock.
And then,
Right.
Okay.
and
That
then
was-
you'd come back and you'd have relationships with these people, so we would all look good.
Right. And you didn't do anything wrong. Actually, what he did was he helped me. He helped my
Right.
customer get a better price while also allowing his customer to make a bigger sale. Right. And so, because
Yeah.
if he was offering a quarter and there were 3 other people offering outside him and I went and bought 20,000 at a quarter, he's only going to sell 7,000 of that.
Right.
But if
Okay.
I sit back and I bid $20 for my 20 and there's 40 more bid for on the book, now it's a 20 bid for 60 and he makes the whole sale. He's just sold 60,000 shares. His customer is much happier with that than just selling 7,000 shares in a quarter and having to sell 50,000 down. And just, you know what I mean? It was the way it worked.
You know, price was negotiable and only existed to facilitate the transaction. The idea was
Okay.
that you needed to move the inventory, and it needed to be done in a way that didn't upset the participants on both sides, as well as people in the crowd.
Correct. But remember, there were also only 7 price points to trade, right? Between $20 and $21, was an 8 1/4, 3 8 5 7 8. That was it. There was only 7 price points. So today there's 1,000 price points, right? Because
Right.
there's 0.0001, 0.000, all up to 9999. Ridiculous. But that's what exists today.
Right.
then there were only 7 price points. So if I paid up a quarter, if I paid up 25 cents for stock, I better know damn well what I was doing. And I had to be able to go back to my client and say, yeah, I paid up a quarter, I bought 50,000. Here's why.
There's someone big behind me.
Right. There might be a big 20 bid.
Right.
There might be above that offering at a quarter, there's nothing offered. So that I had to be able to justify it, right? Today, again, but I could do that because I could have a conversation. Today, you can't do that.
How are they going to learn?
Okay.
Well, they don't, you learn differently, right? I mean, you learn by.
Well, I learned, so right, you guys were talking about like, it's learning by doing, right? I'm learning by doing, I'm still learning by doing, but it's clicking.
By the way, are there people watching this? Okay, so I don't want anybody who's watching this to think that.
There's lots of people.
Okay, well, I didn't know it. How do I know? I don't want anyone here to think, oh, here's this old guy going back. He wanted, that's not what I want at all. I'm telling you the way it used to be, how we learned. Look, I was 19 years old in 1980 when I went to the floor of the New York Stock Exchange.
Nice.
1980, I was a freshman. I had finished my freshman year of college. It was the summer going into my sophomore year when I had the opportunity to intern on the floor of the exchange in 1980. Now, I had never been. I wasn't a kid from New York.
Wasn't it amazing?
It was amazing.
It was amazing.
I was a
you
kid
guys,
from Boston.
was watching.
I wasn't a kid from New York. I had no idea what the New York Stock Exchange was. I didn't know a buy from a sell, stock from an eighth from a quarter. I knew nothing.
Did you know how to tie a tie?
I didn't even know how to tie a tie. But anyway, I had this opportunity to go intern on the floor in 1980. It was right after for Doug McQuaid, who I don't know if you, I don't know, would you know Doug? He was a $2 broker. He's not here anymore, but he was a great guy. But
cool, like you remember these.
Yeah.
Guys.
Oh
These
yeah.
guys.
You can remember who was in the crowd. You can remember what happened. You remember the conversation. Anyway,
it was so classy.
It was a great place. It was the summer 1980. But what you guys have to understand was we had just come through the Jimmy Carter years, right? Which was a disaster for the country.
The Dow was at 600.
Ronald Reagan had just become. Well, it was 1980, so it was the election year. Right, we were in the middle of the Iranian hostage crisis. There had been an oil embargo. The economy was a disaster. Inflation was running at 13%. Interest rates were approaching, and they were going to 22.
Right,
and unemployment was 10%. It was a disaster in this country.
Right,
and then Reagan got elected in November of 80. He became president in 81, January of 81.
The day after election day, they let the hostages go.
Right, they did that to Jimmy Carter. They shoved it right up his ass. They shoved it right up his ass. And the minute Reagan took office, they said,
like, okay, we're done.
We're done. Exactly right.
We're out.
Yeah, exactly right. That's a whole nother conversation. But I didn't know, like I said, a buy from a sell that when I walked on the floor in May of 1980, right?
You know what they told me on the first day? They said you can ask any question once.
Right.
There's no stupid questions.
There were no stupid questions. There were no stupid questions.
They were like, you can't ask the same question twice.
No, right. You had to ask it only once.
Only once.
I think, but the best part, things like, they're used. Well, they're still on. When a stock ticks up or it ticks down, right? I mean, it's a plus tick or it's a minus tick. If it trades up, it's a plus tick. If it trades down, it's a minus tick. Right. Now, when you trade an eighth of a dollar, it was easier to see that because the stock would trade, up a quarter or down an eighth, whatever, you would see it, right? But the best part was when you first got there, when you were brand new, they all took advantage of you. Someone would say to you, hey, go downstairs to the storeroom and get a box of plus ticks. Oh, what the fuck? Okay. What the fuck did I know? I did like I was told. I was 19 years old. What the fuck? So I'd go downstairs to the supply room and I'd say,
things on your back.
They're right. Oh yeah. But I'd
on your back.
But you say to the guy in the storeroom, I need a box of plus sticks, and he would burst out laughing because it was clearly a joke. But what did I know? I didn't know what a box of plus sticks was. But that was part of
the camaraderie.
It was part of
the hazing process.
I was about to say that's your hazing. That's your initiation, right?
Yeah, hazing.
Like
call it hazing. It
hazing.
Harmless,
I mean, come on, that's harmless. Yeah.
But it was hysterical. And look, the other thing also, don't forget. Well, even today, everything trades in a symbol. But on the New York Stock Exchange in 1980,
there weren't that many symbols.
Well, there was 1, 2, or 3 symbols. That was it. If it was a 4-letter. If it was 4 symbols that traded on NASDAQ, did not trade at the New York Stock Exchange, right?
Okay.
So, and you had to know the symbols because everyone spoke in a different language,
right?
If you were a buyer, you spoke one way. If you were a seller, you spoke another way, right?
I'm a seller, I'm a buyer.
Right, or you'd say 20 for 10,000 meant you were bidding $20 for 10,000 shares, or you might say 50 at a quarter. So you're offering 50,000 at a quarter. Now, the full figure was understood, right?
Right.
If you spoke in the fraction, you understood what the full figure was.
Right.
But so the way you spoke is how you indicated in the crowd if you were a buyer or a seller.
So even to this day,
Okay.
when we don't like an idea, we just go at. That's it. Just like someone says,
Okay.
I got this idea, and as traders, we just go at.
Right, like you're a South.
So
like it- like
this
I'm a South.
idea is not working.
Yeah,
So-
exactly, right.
so
But it was, so I was there for a month in the summer of 1980. By the end of June, it had bit me in the ass. I was like,
Right.
oh my God, because
What
the
did you get
energy of the
paid?
place.
What did you
Listen,
get paid?
$125 a week in 1980.
I got
is what the-
250
okay.
from Walter.
Yeah, what year though? 1980?
80, yeah.
Oh, fuck, you did so much better than I did.
Right.
But wait, it was $125 a week in 1980 and 1981. In 1982, which was really the height of
It was the beginning.
economic, it was,
the
well,
beginning of
it was the worst of the economic,
situation, recession.
but it was the beginning. August 17th, Tuesday, August 17th, 1982 was the birth of the greatest bull market this country's ever known, because that was the day that the Fed came out and then they made that surprise announcement, which the Fed never did. And they cut rates by 10%. They cut interest rates. Listen to me. They cut interest rates by 10%. 10%, not 1%, not 1/10%. 10%, they were 20%. So 10% was a 2 percentage point move in interest rates. Today they're talking about a 0.5% that was having a fucking nervous breakdown. Am I right?
Yeah.
Okay, so on that day,
And volume on the stock exchange was 12 million shares a day.
yeah, well, yeah.
So-
And it was, and you know, in the Dow, I'll never forget it, on August 17th, the Dow was trading at 792.
right.
And the Dow would be up
And they're-
50 cents or down,
Right.
25 cents. That was a big move.
I
right?
remember Donnie Stott being like selling all the futures.
Donnie
every
Stott.
yeah.
Donnie Stott. That's like a black, is he still alive, Donnie
Yeah.
Stott? Is he really?
And
Wow.
so I asked him why he was selling so much, and he said the Dow had never been up more than $20.
Right.
Oh, this is that guy. This is that
Yeah.
guy. I love this story. Yeah.
On that day, August 17th, when they came out and made that announcement, oh, look, interest rates were 22, they cut them by 2% or 21%, they cut them by 2%, they were going to 19%. 19% was still dramatically high, there was no doubt. But the Fed drew the line in the sand, and now it was clear. The way it is clear today that rates are going up, it was clear then that rates were going down, and the
Okay.
market fucking exploded, right? And so the Dow rallied 4.5%. 4.5% was 35 points. That was 4.5%, but it was the most dramatic. Yeah, it's almost like,
Yeah, no, he died.
oh, he died.
Yeah.
Yeah.
Anyway, yeah, it was nuts. The market would go like,
Yeah, it was on that day, the market was crazy, but it was, I was going into my senior year in college, right? It was 1982. So I was going back in September. I went to BU. So I was going back, but the broker now I was working for, I worked for Dougie in the summer of 1980 and 81. In the summer of 1982, I came back to work for Dougie, who was an independent broker, two-year-old broker.
Right.
And I came back to work for Dougie, but the
What is it?
economic conditions.
hey, what does a clerk do for a $2 broker? They're just basically calling the customer.
No, well, they're answering the phone
Oh,
from the
right.
customer. They're taking the orders,
Right.
right?
Like I work behind Walter.
You work, right, you work behind the book.
Right.
I work for the broker.
Right.
So I would
mean,
have.
did your
customers.
deck look like our deck was huge because your deck was smaller. You just had individual.
We had just individual binds. You
Right.
guys had the books and all that shit,
Right.
right?
Yeah.
For all the different stocks.
I mean, it's like this high.
Yeah. Yeah, ours was just the width of my shoulders is how big of a workspace I had, right?
Right.
I had a buy pad, a sell pad, a cancellation pad, and a report pad.
And then lots of how many phone
And
lines?
I had two of those industrial metal phones that were stacked on top of each other, and each phone had 12 buttons,
Right.
right?
So
they
direct
were,
lines.
well, some of them were direct and some of them were dial out, right? But most of them were direct lines. So if you press a button, you went to Goldman's trading desk or First Boston's trading desk or Bear Stearns trading desk or
Right.
whoever, right?
Not the public. The public.
Not the
couldn't-
public. No,
public,
yeah.
public could never get that number.
No, but besides the fact is it was 1980. So I could, on the floor of the exchange, I could only talk to other member firms. Today, on the floor of the exchange, before I left, I had a business where I could actually talk to the hedge fund directly, the mutual fund directly, because they changed that law. It's called the Glass-Steagall law that Sandy Weil was really credited with breaking down, right? And that law was put in place after the crash of 29 to separate, the client from the source of from the directly in the equity markets, and there had to be a broker in between, right? But in 1998, they did away with that law, which ultimately opened up the doors and the
For
opportunity
electronic trading, right?
Well, not only for electronic trading, but for me then to be able to call mutual funds directly, hedge funds directly, foundations directly, any institution that managed money on behalf of an individual. I wasn't gonna call you as an individual, right? I was gonna call mutual
Gotcha.
hedge funds that were, had millions of
Yeah,
dollars.
you want the bigger players, of course. You want access to that bigger pie, of course.
Then it was so in the summer of 1982, when that happened, the market took off. That one day it was up 35 points, which was 4.5%. So think, what's 4.5% today? The Dow's trading at 37,000, wherever it's trading. So 4.5% of would be the equivalent, right? Besides the fact
we have 4.5%.
yeah, well, we have them now, but
right.
But now it's like nothing because of the technology, right? Think about doing it 4.5% with no technology. It was all human beings. That was the difference, right? And it was all
everything.
Do you guys? I was gonna say, do you guys still know people that draw charts by hand?
Yes, the people that are generation. Helene Meisler.
Okay.
Really? Helene Meisler on Twitter.
Oh yeah, she has point figure.
She does it all by hand, because guess what? When you draw a chart by hand, you actually take the pen to the paper and you have to draw it. You have to use your ruler, and you have a different feel for the way the stock trades versus you just go into your computer, you type in the stock, and all of a sudden it creates a chart.
Interesting.
You have no fucking feel what that chart is like. You didn't draw it hand in hand.
Or even
okay.
Right? And so Helene Meisler, if you guys follow her, she's on Twitter, right? She's a point chart person that she physically draws her charts every day. And on Saturdays, I believe it's on Saturdays, she's got a thing called Chart Fest. I don't know where she does it because I've never done it. It must be like a Twitter Spaces or something where people dial in. I used to use point and figure. I don't do that anymore. So I don't trade like this anymore, right? I left in 2019. So I flipped to the other side. So now I'm a chief market strategist at an independent $1.2 billion wealth management firm. I do a lot of television. I do a lot of education, market commentary, that kind of stuff. So I don't trade per se anymore. I mean, I trade my own account, but I don't trade.
For everybody's watching, like, how important is macro?
Well, it's very important. I mean, listen, that's how we learn. That's how I learned, right? So I pay very much close attention to the macro,
political
everything. But look, politics don't price stocks, right? In the long term, politics don't price stocks, but political bullshit like we're seeing creates chaos in the short term, which then creates opportunities in stocks, because some stocks get dislocated, something happens politically, a stock gets dislocated, and then it settles down, and boom.
And what about
focus is right back on the fundamentals?
What about the technicals for everybody who's using?
Well, I'm a very much a technical person, right? So I trade based on charts. When I look at my own portfolio to trade,
I mean, with the macro, you don't have a stop.
No, correct.
And with the technicals, at least you have a stop.
Right, because you can see it, right? You can see it on the chart.
Right.
You can see support, levels of resistance. You can see where it's trading, how it's trading. So I trade. I'm very much a technical trader.
Like all these people who are along the metals forever because they were going to print money, or how about people who bought Bitcoin to hedge against inflation?
The Winklevoss brothers are getting absolutely crushed tonight. Genesis, their crypto firm apparently halted redemptions because
Gemini, yeah. It's a lot of the exchanges. All the exchanges are at risk, man. It's like
there's going to be much more fallout. I think. I don't think this.
Oh yeah, we still don't know yet. We don't know the full contagion at all. I actually wanted to ask though, since you were talking about with like the political side of things, was Trump the first person where it's like he's just throwing tweets out there and it's like you're getting some crazy algos.
Twitter didn't exist in 1980s.
Well, of course.
Didn't happen.
But I'm saying even like oppressor, like anything like that. I think he was the first guy where it's just like, oh, you got to be watching the feed. Like it's like Elon, like you got to watch what's going on because this is going to create some crazy programs.
And he did create crazy shit. He absolutely did create crazy shit with his. And look, he's going to do it again now, right? Last night he announced he's going to do it all. He's already started the China virus and DeSantis and Youngkin, right? Here's what I think. I think that first of all, there should be age limits on any elected official.
He just said that.
I think you should absolutely age limits. Term limits and age limits,
right?
But, he's going to be 78 or 79 years old.
No insider trading.
Don't even get me started with the insider trading bullshit. Because listen, because had you and I done that, no one would even talk to us. They would have thrown us in jail at the end of it. Now Nancy Pelosi, she puts it all over.
Oh, okay. Nancy, yeah.
And all of them, by the way, not just Nancy. All
right. She's just the funniest one, right?
Because she's so she's the most. She's the one everyone's focused on, right?
Because she has the figure. She has that public profile, right?
so how do these kids learn? Like like, hey, we got dosed with hundreds of years of knowledge, and then the exchange goes piff.
Right.
Piff.
Right.
Like, so like we're the keepers, we're the last in the line.
We're the keepers.
Of
Yeah,
knowledge.
the keepers. So
It's
they
like
need
the
to come to
music's-
us.
right?
They need to, because I've got so much knowledge in this head, you should come to me. You should
Right.
come to him because
Right.
we got knowledge.
Right.
No, but how are they going to learn?
How are they going to learn?
Well,
Like, what are they going to do?
Well, because they're learning how they're learning. So they
Right,
got
they're watching,
artificial
right?
intelligence. They got,
You got
all this stuff.
right?
You got trading rooms. You got Reddit. You got all that shit. And I guess that's how you learn today. That doesn't work for me. I was much more.
What was hands-on? It was like in your face. It was,
It
was transactional, and it was emotional.
It was the most.
Well, I was gonna say the issue too with like the trading rooms versus like the Reddit, right? It's like, are you trying to learn how to trade? Or are you trying to find someone that has winners, right? It's like following a gambling tout. Like,
Well,
do you
okay,
want
but you see-
like,
you
you
see,
know?
You just hit the nail on the head. And here's what I think about that. I'm in the camp that I don't think trading and investing should be like gambling, like Vegas. You want to go to Vegas? Go to fucking Vegas.
It's not gambling. Trading
I'm
is not
a
gambling.
long-term investor. I'm not a day trader, so let me just qualify that, right? So I don't whip
All right.
around all day long because that's just not what I do,
But
right?
hey, no, don't forget where you're going. Every dollar ever printed has to be traded to get a return if interest rates are below the rate of inflation.
Correct. And so I play it from a long-term view. So my style, the way I look at things is very different from the way you're going to look.
You can't compete with a machine.
No,
At speed, right? From picoseconds.
Right, but
saying
listen,
picoseconds.
just because something happens in picoseconds doesn't mean it's the right decision.
I agree.
Just because you bought it fast,
Right.
okay, great, you idiot. Because 2 seconds later, there's a headline that comes out and there's 5 cells
Okay.
down $5.
How about-
Great, I'm glad you bought it in a picosecond.
Right. I was gonna say
Right.
a good example, right? The Eli Lilly thing that happened
Right.
recently. You know what I
Exactly.
mean? Where it's like, it's fake news and they're just like, hey, free insulin for everyone. And then it's like, haha, down 6%. You know what I mean? Like,
Exactly right.
and
Exactly.
the machines are just firing off that, but it's wrong.
Listen, in the middle of the crisis, and I believe it was 2010, I don't know where you were in 2010, but when the financial crisis was
High
really
school.
when the financial crisis was
High
kind of in
school.
the thick of it, and the foreign and the European banks were getting absolutely slaughtered, and the European Union was meeting in Brussels every week because
Was that Corzine?
no,
When
was
MF Global?
not MF Global, when the Eurozone countries
Right.
were all meeting in Brussels, right?
Right.
Every week because the European banks were under pressure,
Right.
the economy was going to collapse and all that shit. Remember that?
Right, he was long all these European bonds.
Yes. But the point I'm making to your point about Twitter and shit
Thank you.
is Angela Merkel, who was chancellor in Germany. She's no longer chancellor, but she was during the crisis. Germany was kind of the leader, right? Germany was the powerhouse.
Still is.
And so Angela Merkel was looking,
Still
even
is.
though they had, still is.
Still is.
They had weekly meetings in Brussels, the Eurozone countries, all that stuff. And Angela Merkel was the one that was really leading all these discussions. So one day you're sitting there and the market had been under pressure this particular day, because I'll never forget it. Suddenly, and everyone's focused on the ECB meeting in Brussels and the Eurozone countries, and the Greece was falling apart, Spain was falling apart, Portugal was going down the drain. And there was a big Brussels meeting. And in the middle of the meeting, Angela Merkel stands up and walks out of the meeting. Now, you don't know why she stood up and walked out of the meeting, but Twitter, there's a headline on Twitter, Angela Merkel left the meeting and the fucking market sold off. Why? Because somebody made an assumption, the algorithms made an assumption that Angela Merkel left the room because she was frustrated, she was angry, they weren't right, and so it was going down the tubes, and the fucking market sold off.
Shoot first.
5 minutes later, she came walking back in the room, and the headline says Angela Merkel, and she just picked up and walked out.
Do you remember
But-
down 1,000? Remember
Yeah.
Dow dropped at
Yeah, that was the Mayday crash, the mini crash.
was that?
That was a whole nother conversation.
What was
That was another tech fat finger. Some guy at Waddell and Reed that entered this big futures order
Right.
that should have been a percentage of the volume type of a trade.
Okay.
It enters the order and he overrode, because the system sends you the
It was
messages.
down 1,000. We were
Yeah.
like, it's a nuclear attack.
But
We got you.
I got yelled at. Sorry. But anyway, wait a minute. But let's just go. Let's just finish the Angela Merkel story for a minute. So Angela Merkel comes back in the room and the headline says, Merkel enters the room, and the fucking market took off again, right? Because she left the room, it was negative. She came back to the room, must be positive. Meanwhile, all she had to do was go to the bathroom. So there was nothing positive or negative about it. Yet the Twitter sphere created this sense that there was panic when she left the room, and then created this sense that it was all good when she came back. And so you saw this happen in the market, right? Which is why it's so frustrating for long-term investors, people who are not in this business, who see that happen to the market. And they say, how can the market do that? Well, it does it because now there's Twitter and Facebook and LinkedIn and Reddit and all that shit that creates headlines and these smart logic algos that scrape all the headlines from wherever they can find react to the words. Now you and I know
we call it
urgent, but you and I know that you can use a word. But if I say the word to you in the sentence, then you know how I'm using it. You can hear the intonation of my voice. You know whether or not
there's context. Of course, it's like texting. It's like texting with someone, right?
That's exactly right. The written word. If you don't hear somebody say it the way that they mean it, you can interpret it 10 different ways.
Of course,
right?
Of course.
And I say that to my kids, and I say that to my wife all the time. I said, you have to be careful because the person writing the text is saying it one way in their head, but you're interpreting it another way, and you'll make a comment. Oh, that person's such a bitch. Why? Well, look at the text you just sent me. Well, how do you know you're reading it in a mindset that sounds like a bitch? But maybe it wasn't.
Maybe it wasn't.
Right. And so that's the problem today with the social media stuff, because it happens. Look what happened to Lilly. Somebody created a fake account. I think it happened to a couple of stocks, didn't it? It was Lilly, and there was some other stock that it happened to.
You know what they talk about a lot is that in '87 at the lows, it was the idea that there was a collective crowd in the ring. Like there was in other words, Matt, I'm saying that if you get a big drop and you have to act in the face of by yourself, you won't have the courage. But when we had people around together, we would actually look at each other. Kenny and I would look at each other and say, ready? And all of us together would go buy them now. Right. But we had strength in numbers.
Did strength in numbers. Right. 87 was another amazing event. The crash of 87 was another amazing event.
But even the day May 6th in 2010, the Dow dropped 1,000 points for no reason. Right. It was the first time.
Right. And because of that Waddell and Reed fat finger.
Right. And we're all thinking like it must be because obviously the market knows before the news hits. So the price moves before the news ever happens. So the idea is like, well, it must be a nuclear attack. We're like, what is this?
Right. So we're kind of talking about this irrationality, right? With markets and trading. What was like for both of you? I'm genuinely curious. What was the most irrational thing that you saw on the floor, like just while you were there?
The last 3 weeks.
Okay. You're not on the floor. You're not on the floor.
Well, we're not on the floor.
I'm going to tell you what the most irrational thing for me was.
Oh, that's fun.
Oh, that was somebody in your room. I thought I was going to get yelled at again. No, the most irrational thing for me was the crash in 87, and I'll tell you why it was irrational.
Oh, we figured out how to turn the machines on.
Well, because when the market took off in 1982 and then 83, 84, 85, right, the market had these massive gains.
January of 87 was straight up.
Correct. The market had these massive gains. And so then in late 86, early 87, there were a bunch of MIT quant guys who were not traders. They were not they were academics, and they were quant guys, and they thought they knew better, and they created this product called portfolio insurance, right? Now, it's all great. You know what insurance is? Insurance is insurance. It protects you against a loss. Health insurance, life insurance, disability insurance, right? Car insurance. So this is portfolio insurance. Now, portfolio insurance is protecting your portfolio. Now, you meaning as an institution, not you as
right. Not me as a retail.
Not you as a retail person. Right. You're talking about big portfolios.
Of course.
It was just a giant stop loss.
Right. But they used a big IBM computer, supercomputer, and they created this program that was supposed to insure you against losses. It was called portfolio insurance.
Which would probably fit on your phone.
Right. Today it would fit on your phone. But here's the problem. When they created the portfolio insurance, the market was doing nothing but going up, right? So the system was never tested.
Right. It was self-reinforcing.
Never tested. While they back tested, they ran tested. They didn't fucking do that.
We were in the ring, and we'd see the machine come in and offer. If we lifted the offer, they'd have to go buy the underlying on your side.
Correct. But here's the problem with portfolio insurance. When it was all built around data and information. And so it would, this product would gather global information from the Asian markets, European markets, the US markets, and that would start to, run it through a system. And then the system was supposed to identify whether or not you needed to protect your portfolio. You would protect it by selling stock and raising cash and putting cash on the side and letting the cash just sit there until you got the signal that it was all okay. So here's the problem. 1987, from 82 to 87, the market went straight up, right? The Dow went from 792 to 2,800 by the summer of 1987. It was a massive move.
Right, massive. And interest rates had come down, way down.
Right, interest rates come way down, which is what fueled the move, right?
Bonds had a huge rally.
And so it's what fueled the move. So now in the summer of, 1987.
Oh, and it was Reagan who had, right? Reagan was in office.
Well, Reagan was in office,
right?
But in the summer of 1987, the economy started to stumble a little bit. The US economy, the Asian economy, the European economy. But here's the other problem. Remember 1987?
20-something.
Yeah, correct. But here's the problem. The world was not as connected the way it is today, right? Because today you get Twitter and social and all that shit.
It was prior to the internet.
And so you used to, you found out what was going around the world because you pick up the newspaper and you'd read what happened in Asia, what happened in Europe. So the global economy started.
When you made a trade, then you had to write it down.
Correct. You had to write it down. You had to gather the time, you had to gather the back.
Right. You had to write it down. And then it literally had to be put in a punch card.
On a punch card and then run through the system.
Right.
But what happened as the summer of 1987 came, the global economy started to stumble a little bit. And, the macro data started to weaken and the market sold off.
Wasn't it like a credit card thing or something?
No. So listen,
legislation or something.
It was, well, you mean what was the ultimate
trigger?
What was the ultimate trigger in the economy?
Yeah.
Was it savings? I don't know if it was savings and
Loan or something.
That was before that. It was probably before that savings.
Right.
But what ended up happening was as the global economy started to stutter, the Dow came down, then it traded up and it down, traded up like this, but it wasn't panicky yet. But as we got into the fall of 1987, I'll never forget it. It was Wednesday, Thursday. Well, it was Wednesday, Thursday, Friday, 14th, 15th, and 16th. The Friday was the worst day. But it started on Wednesday, the 14th, 15th, and then 16th. And what happened was the markets started to come under even more pressure, and they traded down and they closed on the lows, and the volume picked up, and so there started to be some concern, not only here in the United States, but it happened in Asia. It was happening in Europe, right? And then on Thursday, when the market opened, it tried to rally, it didn't. It came under more pressure, it closed on the lows again. And then on Friday, it closed on the lows again. And if I remember correctly, I think the market was down 190 points, which was a big move in 1987 on big volume. But it was a Friday night and it was right before Halloween. And I remember going home. I was 26 years old. We had just bought a house. My daughter was just born. She was 6 months old. We went out pumpkin picking, did all that shit, right? And I remember saying to my wife, I don't know, something doesn't feel right to me. But what did I know? I was 26. I knew nothing, right? But
yeah, that's me now. I don't know anything.
Right.
But we'd never seen.
No, I had never seen anything.
Like nothing like this had ever happened.
No, but it just felt like something didn't feel right. So
and there was no reason. They had not rung a bell. And all we'd seen for like 5 years was straight up.
Straight up. But so then what, over the weekend, these portfolio insurance guys take all this data and run it through this big fat IBM computer, right? They took the European data, they took the US data, they took the Asian data, they took stock prices, they took macroeconomic data, they put it all into the system.
Look, never buy the bottom of a downsloping channel.
Right. And remember now what happens on Sunday night in New York. What time is it in Asia?
It's Monday morning.
Monday morning, isn't it?
Right.
So you're putting your jammies on and getting under the covers on Sunday night, and it's Monday morning in Asia. So now what happens is this, or maybe you don't sleep in jammies, whatever. But Monday morning, it's this. The portfolio insurance guys, they had fed the information all into the computer, and so the computer spit out an action.
And so Monday morning was the biggest gap down we'd ever seen.
Well, yeah, but wait a minute. So here's what happened. Who was first to get the action?
Oh, totally.
The Asians, right. Because those were the Asian markets were the first.
They were the ones that, they were awake.
When I say Asians, I mean Australia, Japan. I don't mean China necessarily, because China wasn't there, right? It was Australia, it was Singapore, it was Australia and Japan, right? But the Asian markets got the first indication to sell to raise cash. And the order was that Asian investors, Asian mutual funds, anyone who bought this product got this message that they needed to sell 2% of their portfolio, raise the cash, and put the cash aside. Well, okay, that's great. You manage $100 million, I manage $1 billion. Your 2% is very different from my 2%. It's still 2%, but it's very different, right? So the Asian markets, which wasn't a big deal, but the Asian markets came under pressure because they were told to sell 2%.
Time out. Cliche among investors is that the Asians move like elephants. They move like en masse, like a school of fish, right?
Yes, but here's what you asked the question about. Here's what the herd mentality fucking did, right? So the Asians who bought this product all got the message that they needed to raise cash 2%. So everyone sells 2% of their portfolio. So what do you think happens? Now, 2% of the portfolio causes prices to go even lower than they were on
Friday,
of course. Right? So what do you think happens? These portfolio insurance guys, oh shit, look at what happened in Asia. We have to rerun the numbers. So they, in the middle of the day, they take the current Asian numbers while you're sleeping in New York and Asia's falling apart. They rerun the numbers. And now there's a new message for guess who? The Europeans. Because as the sun sets in Asia, it rises in Europe. You're still sleeping. So now the Europeans get a message that they needed to sell 3% of their portfolios. Because of the damage done in Asia, the Europeans their message was even bigger. So now think about that. Everyone in Europe that bought this portfolio insurance product got the same message. You need to sell 3% of your portfolio. So again, I manage $1 billion, you manage $1 million. Your 3% is very different from my 3%, but it's still 3%.
And right. And the way the markets work, no one's in a real rush to take your problem off your hand.
And so what happens is the European markets opened and immediately came under pressure, right?
Pressure.
So now,
they had to be huge.
Okay, but they came under pressure. And so now these quant guys, remember, this product was never really tested in a live environment, but it's being fucking tested today.
And there was no,
right? There was no and so now they take the European data. Now remember, Europe is still open when the US opens. There's like a crossover of 3 hours.
It's a couple hours, yeah.
Okay, but as Europe is now imploding, because now it's coming under pressure, these quant guys took the most recent European data that they could have, and they run it through the system again. Now, here it is. It's 5 o'clock in the morning on Monday morning. I jump out of bed. I take a shower. I shave. I get out to the train station. I get the cup of coffee, and I pick up the Wall Street Journal on Monday morning. What's the fucking Wall Street Journal telling me? It's telling me what happened on Friday. Meanwhile, Monday's already come and gone into place of the disaster, right? And so I get on the train. I'm reading, oh, wow, look at what happened in Asia.
Art used to write his little notes.
Yeah, he still does.
Right.
But I'm reading the Wall Street Journal on the train into the city. Meanwhile, the world is fucking falling apart. I have no idea. I get to the floor of the exchange, and you guys can Google this. If you go to YouTube, you can actually Google this story I'm going to tell you, because somebody created a cartoon out of it, and
okay,
it's a stick figure cartoon, but it's me telling this story.
It was quite a day.
And so now that the European markets are coming under pressure, the quant guys re-enter the data into the system, and guess what the system does now? The system now tells all the American mutual fund managers and hedge funds and portfolio managers that bought the product that they needed to sell 5% of their portfolio. So do you see what happened? It went from 2% to 3% to 5%. And guess what? We are the biggest capital markets in the world. So our 5% is massive, right? And so now you asked the question. So here's the answer about the craziest thing I ever saw.
Yeah.
So now I'm sitting there at my booth at 7 o'clock in the morning. I'm going through the tickets from Friday, blah, blah, and the phone rings. Now the phone rings at 7 o'clock. When the phone rings at 7 o'clock, somebody's usually dead, right? Because no one calls anyone at 7 o'clock in the morning. So it was a buddy of mine from First Boston. Now this is what's part of that cartoon I'm telling you about it. He calls me up and the phone rings, and he was one of our customers. Say, hey, Johnny, what are you doing? How's your weekend? But I'm talking like no big deal. Meanwhile, the world is fucking crashing, right? He says to me, bro, he goes, do you have any idea what's going on? I go, no. What do you mean? I read the newspaper. I'm drinking my coffee. I took a dump already. I don't know what's going on. I don't know what's going on. He said to me, it's going to be a fucking bloodbath today. I go, wow, why? Like, why? And so he starts telling me what happened in Asia and then Europe, and now what's happening in the United States. And so, in fact, it was a bloodbath. Now, remember that day, the market closed down 22.5% in 6.5 hours. We went from 2,500 to 1,758 or whatever it was, right? But here's the worst part of it.
The low in the SPOOs was 200.
Johnson & Johnson which makes baby powder and baby oil, traded at $96 on Friday night. It ended at $96. Do you know what it ended on Monday? Now it's Johnson & Johnson.
$70.
$45. Johnson & Johnson lost 50% of its value in one day. Now, you say to me, what's the craziest thing? The craziest thing was the computer kept saying, you need to sell, you need to sell, you need to raise cash, you need to sell. Well, at some point it got fucking stupid. Like people go, wait.
But no, the specialists have to be.
Well, of course, but the herd mentality became so frantic that it was like the human beings took the brains out of their head and put it over here, and they did just what the computer told them to do. Nobody stopped to say, wait, stop. This is like spinning out of control. Nobody did that. Why? Because you paid a lot of money for the portfolio insurance. And if I had the portfolio insurance and I was your trader and you were the CEO of the company and you said to me, Kenny, are you raising the cash? I'm going, no, this is really dumb. Like these prices are stupid. You'd say, do what the fucking computer tells you to do. Don't you fucking think about it. And so you didn't. And you just execute.
Right.
And you just, so listen, I would come back to the phone. I'd say, listen, this thing is going to gap down $10. You sure you want to sell 4,000 shares down $10?
Right. I was going to say, you're selling into a gap down too. So it's like, there's no bid.
And that was exactly why. That was out of all the days I was there, that day.
The people who hit the bid and the big gap down made millions.
Right. So I was actually going to ask, did they have circuit breakers back then? Did they have circuit breakers?
And it was
that's the other thing. Okay, that's incredible. That's incredible.
The circuit breakers.
It was like,
because you're like 20% down. No way. Like not today.
Yeah, 22.5%. And listen, they were talking about, I'll never forget it, Dick Grasso at the time. They were talking, he was at the money desk. Right. They had all the red lines to all the big banks, plus they had a direct line to the Fed. And I remember staying there. Dick Grass was on the phone, talking to all the different bankers and the Fed and the president, all that shit. And there was talk about should they close the market.
Right, they closed the futures.
But they didn't close the stock market because the sense was if they closed the stock market, it was going to create even more panic.
You know what they said?
Why did they close it?
With these circuit breakers, Matt, they say that if we hit the first limit, the next bid is the second limit.
Right.
Okay.
Yeah.
Right. But the circuit breakers were born out of that event, right? Because they didn't exist until that event happened. But that answers your question, because on that day, the portfolio insurance that was created, which has been since, it's not the same portfolio insurance today that it was then.
No,
but
I would hope not.
But the computer kept saying you have to sell more, and so you're selling into this downtrend. And Johnson & Johnson went from $96 to $45. It lost 50%. But listen, you know why it lost 50%? Because when you need to raise cash, where do you fucking go? You go to a stock that you can sell it.
Right.
I mean, listen, you own Bank of Hawaii. The thing trades 100,000 shares a day. Who the fuck wants Bank of Hawaii? Nobody.
Right.
So you sell Johnson & Johnson, Bank of America, General Electric, American Telephone. And those were the stocks that all got slammed because they're big market cap stocks. And you could. They're
more liquid, of course. You have a better exit strategy versus like, okay, for example, look at like the FTX shit, right? Where they're like, oh, like look at all this worth, and it's like they can't exit because it's down 90% and they're the biggest holder. Like there's no bid. There's never going to be a bid.
I think out of my 40 years on the exchange, that day to me, it was like everyone took the brains out of their head. Like nobody was saying, wait, this is out of control. This is not making any sense at all.
Well, what about the 2000 rally in the NASDAQ? Like pets.com. Do you remember those?
Yeah. That was idiocy as well. But that happened. Listen, that happened on NASDAQ. It didn't happen at the New York Stock Exchange.
Like on the way up, people would be like, we don't have to make money. They won't be subject to valuation metrics. And until we
Morgan Stanley would bring pets.com to the market. They'd bring it as an IPO and go list it on NASDAQ. They'd say pets.com is worth $22. Okay, it would open at 150, trade up to 300, down to 80, and then close at 220. You go, what the fuck just happened?
Right, and then people who lost everything, and then nobody ever talks about it. It's like the weird uncle at Thanksgiving.
Yeah.
You know what that reminds me of? I don't know. Like I think Chris, we talked about this. Kenny, did you see that Hong Kong listing, the HKD? That was a similar scenario where it went from $10 to 2,000 in like a week.
Yeah, I own crypto, so I own Bitcoin and Ethereum. That's all I own. Now I own it. And I've written it down. I have it. It's 3% of my portfolio, so it's not going to make or break me. And I decided that when I after it broke down, I go, you know what, fuck it, I'm not selling it down here. If I look now, if it goes
Now
to
you're an investor.
but if it goes to zero, it goes to zero because I totally 3% of my portfolio. But I'm gonna say I'm gonna just wait and I'm gonna watch and see how this plays out. I'm not buying any more at the moment, but I want to see how it plays out, right? But I do own.
Had that guy been in the US, he'd be in cuffs.
Yeah.
Madoff was in cuffs in
Yeah.
24
Yeah,
hours.
but that's why he went to the Bahamas because he knew he was doing. He knew he was fucking
He
doing
knew
it.
it was a scam.
Right. He knew
And
it was a
he
scam.
greased all the politicians.
Yeah.
And the regulators.
$40 million in donations to the Democrats. What, did I just say that? I'm sorry. I didn't mean to say that. But that's
It's very funny when you look at the whole circle of everything and Gary Gensler
Listen,
just keeps
when you look
popping
at the
up and
whole
I'm like,
circle,
wait
the
a
mother
minute.
and father are
Yep.
professors at Stanford, very involved
His-
in the scam.
His
And the
mom's a
aunt has got
professional
some big-
bundler.
The aunt has got some big position at the World Economic Forum, right? So think about the tentacles that she's got in
They're gonna
terms
come
of,
for
right?
the regulators. They
Listen,
gotta come for the regulators.
I don't know, Gensler, SEC Chair Gensler spoke today. I didn't hear what he had to say.
But they gotta come for the regulators. People are
Well,
gonna be like,
but-
Madoff was in cuffs 24 hours after this went
Yes,
down.
but it's not regulated. So how are they gonna come after the regulators?
Like, there's no sheriff.
Exactly right. But I think there'll be a sheriff now at some point.
Right, because he's apparently, anyway.
But so it's all very fluid.
It's fluid. Hey, you guys, we don't want to keep them. It's been an hour.
Well,
Did
did they hang up? Did they hang up?
No,
There's still
but
people-
I mean, there's lots of people. To everybody.
I
who
actually,
watches,
I was gonna say, I had one last question if you don't mind, Chris.
Okay,
Sorry. I
go
mean,
ahead.
this is, this is a rare thing. Is 9/11 the only time they closed the market? Like actually
when
for an
Reagan
extended
got
period?
shot. Reagan got
Okay.
shot.
Reagan gets
So that was
shot.
the other
They closed the market.
Yeah.
When
Okay.
Reagan got shot.
Because they were talking about it for COVID, right? Like I remember that, like you had people going on like, hey, we need to close the markets, we need to close the markets,
Well,
but I
remember,
hadn't seen.
during COVID, they closed the New York Stock Exchange, but nobody knew that, right? Because,
Oh, I did not know that.
of course you didn't know
Okay.
that, but you know why? Because,
They didn't want you to know.
well, but the New York Stock Exchange shut down. They didn't let anyone there, but the markets continue to function because today, as
Okay.
a result of 9/11, there are 10 different exchanges in this country. The New York Stock Exchange is the only physical one. The other 9 are they're like NASDAQ. They
Right.
operate in the cloud.
Right.
And so therefore,
Gotcha.
they shut the New York Stock Exchange down for 8 weeks. Nobody knew it because stocks traded like normal.
Right.
Which is why when you say to me, why do we need the New York Stock Exchange? Clearly you don't, because it just proved it. But the
Right.
New York Stock Exchange,
knowledge pool was
yeah,
there.
but yes, it was there. It's not there anymore, right?
Right.
But the
Where
New
is
York
it?
Stock Exchange is part of the fabric of the nation, right? It really defines when you talk about freedom and entrepreneurship
People
and
come to
capitalism.
America.
People come to America, they want to come to the New York, they want to see it, even though there's nothing goes on there
If
anymore.
you can make it in New York, you can make it anywhere. You come to the American.
I was gonna say, it's like the Statue of Liberty, right? But like for the market, where it's like, it's
Yeah.
the shining beacon of hope.
Yeah.
Absolutely.
Exactly right,
Right.
exactly right.
You can do it with hard work and a good idea. You can do it.
Right, but the events of 9/11 forever changed the landscape. And listen, that's a conversation for another podcast because.
Yeah.
I
Of
don't know where
course,
you were
I
at
just
9/11,
wanted, I was in first grade, I think. I remember it, but it was like, we were all told to go inside and I didn't
I
know
was-
why.
I was
That's
on the
it, that's all I remember.
55th floor of Tower 2. That's where my office
You
was.
walk down.
No, but only
Wow.
by the grace of God, I got out.
Yeah.
I got out.
Wow.
10
Tell me
minutes-
about the
I
scene
got out
of
10
Elmo.
minutes before.
They
the
took, for everybody who's listening, and I know we're going down memory lane, people who walked out from that high up said when they looked down, it was a kind of a four-sided stairway, and all you saw were a sea of elbows
Yeah.
down like 55 floors.
Yeah, it was only, I was in my office that day.
Did you
but it
smell
was
the jet
only by
fuel?
the grace of God, no, because it was only by the grace of God that I had gotten a phone call to come over to the New York Stock Exchange for breakfast. And I left the building at 8:20. Now, had I not gotten that phone call, then I wouldn't be sitting here talking to you because I would never have made it out.
Out,
It was
right.
only because I got that phone call
Call
that I'm
that
sitting
made
here
it
having a conversation with you. But my office is on the 50th floor, overlooking the Hudson River. Like that plane came right through
Like
my
here.
fucking office.
Yeah.
Yeah, right through my office.
What do we tell the young kids who want to trade? What do we tell them? Keep at it.
Yeah, they should keep at it. They listen, learn, read, ask questions, right? There's nothing that's stupid, right?
Take
The only
your
stupid
losses.
question are the questions that you don't ask, that you should
Right,
ask, right?
Right.
Learn how to take your losses. Don't get married to a position.
Right. Flexibility.
Right. You need to be flexible. You need to surround yourself with people that you're going to learn from, right? Don't sit in a room by yourself.
Okay.
Join a group.
I mean,
Be
yeah,
someplace-
wait, boom, the trade space. I'm terrible. I'm trying to point at it and I'm just failing miserably. But
Right, but be somewhere where there's ideas and people and there's life and there's conversation.
Even
That's where you want to
Absolutely.
be.
even graveyard humor, which we had on the
Right,
floor. which
right.
was very good.
Graveyard humor, I think, is the great.
Yeah,
It's great.
It's great.
But you know, the graveyard humor that we had on the floor doesn't exist today because it can't exist in the
No,
metaverse, right?
right? No, you get canceled.
Yeah, yeah, yeah. You get
I'm
canceled.
surprised you haven't been canceled.
Don't push. I'm probably gonna get
Canceled,
canceled.
right, 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 right.
But
Anyway, so yeah, thank you everybody for watching. Kenny, of course, we'll have back and
Yeah, thanks, Kenny. Thanks,
hope,
guys.
I mean, I don't know what kind of feedback you get. I hope people thought this was interesting and entertaining, at the very least, entertaining.
yeah.
Whether or not they
Definitely
learned anything,
entertaining.
I don't know.
Always, it's always entertaining at the very least. Hey, thanks, guys. I appreciate it.
All
All right,
see you.
see you, man.